New home sales rose more than forecast last month. Sales climbed 18%. But if you look at it over time, as my next guest does, the numbers are less encouraging. He says housing remains one of the big risks for the economy, and he should know. He makes his living looking at risk. Joining me now, Christopher Whalen, co-founder of Institutional Risk Analytics. Chris, always good to have you on Bloomberg.
Pleasure, Mark. Thank you for having me back.
How much risk are we talking about here?
Well, we're still trying to find the bottom in terms of residential real estate. The reason being is there's a huge amount of unsold property, much of it bank-owned. You have many large sellers, the FDIC, Fannie, Freddie, just about every bank in the country is a seller of real estate. And really, in order for us to get to the point where we can really start to give buyers assurance that prices are stable, we've got to go through this backlog. We've got a couple of years worth of existing homes that have to be sold. And you're going to see another peak in foreclosures this year. You're going to probably see, I think, the peak in foreclosure sales this year, I hope. And then we'll start to really be fighting our way out.
Do people have a sense of how bad this situation is?
No, I don't think the markets appreciate it. And
why not?
Well, the Case-Shiller index has lagged. We've had 6 down months now, and it moves slowly. Home prices and home sales in general are a very slow, inefficient market. So you tend to have a long gap between what's happening at the ground level and what you see in these indices that the financial markets pay attention to. That's the thing. People don't really see what's going on in the servicing channel right now, where banks are holding property back because they know they can't sell it, but they have a very limited capacity to retain properties. They can't afford it.
And it seems so cyclical because
yes.
Now if we see the foreclosure rates, at least that's not where it should be, obviously, but then that also precludes new home construction because...
Well, not necessarily. The states, in some cases, are subsidizing new home construction because they want to keep those crews on the job.
But new homes for whom?
Precisely. I mean, California's been doing this. They have people building homes out in the desert, and there's unsold properties closer to the cities right down the highway.
So in order just to keep a workforce working...
Right. That's right. Well, those guys buy lunch every day, and when you start to take them out of the economy and you have them sitting at home collecting unemployment, it ripples through the entire food chain of services. I have friends here in the New York area who actually used to own a chain called A&S. There's a whole bunch of them around the New York area. They had one up near Hartford. They had to shut it down. There just wasn't any volume anymore because of the construction fall off.
Okay, Chris, just for the sake of argument, the housing situation starts to turn around. But without a similar turnaround in the jobless situation, we're still going to have a whole bunch of houses out there, people unable to buy them because wages are stagnant, and also unable to buy them because credit is still not where it should be. Credit is still, I don't know if you'd call it frozen, but you can see some cracks, but it's not where it should be for people to actually apply for a home. As you talked to me about last year, so many people's credit has been damaged. People who had good credit but then lost their jobs or through no fault of their own, something happened to their employment situation, they couldn't even get a mortgage right now.
Well, what's interesting about what you say is the credits out there that could be refinanced that were really attractive to banks have been refinanced, say over the last 12 months. So what's left are properties where you have a less desirable FICO score, you have a less desirable LTV ratio. And remember, though, the lenders are very much afraid that those home prices are going to fall more. So when you come in to apply for a loan today, they don't want to see an 80 loan-to-value ratio. They want to see a 70 loan-to-value ratio. They want 30% of at least current equity in the transaction because they're afraid that that equity is going to get compressed over the next year or two.
Do enough people meet that standard right now?
No, and the other part of this is that Fannie Mae and Freddie Mac are actually making it more difficult for people to get loans because their loan pricing rules are narrowing the window for approval. In other words, say Bank of America, JP Morgan, they know that there's a sweet spot for Fannie Freddie in terms of purchasing loans, and if you don't fit in that square hole, you're not going to get a loan.
How has the landscape changed? Are we going to see a generation of folks who are renters as opposed to homeowners? Well,
definitely. The 6–7% of the U.S. population that we brought into home ownership wrongly through the Affordable home housing programs in Washington, they're now being forced out.
They were brought in wrongly because?
Because politicians decided to make housing a key political toy. They used all sorts of incentives and whatnot to allow the realtors, allow the home builders to increase their population of potential buyers, and now we're reversing that process. It's very sad. You have people who should have been renters the whole time, whose credit's been damaged, whose families have been disrupted, and that's the thing that breaks my heart, is you have somebody who ends up with a bankruptcy or a default on their record when they should have been a tenant the entire time. The industry, Fannie Mae, Freddie Mac, did a terrible disservice to especially new home buyers. That first-time home buyer, maybe they should have rented, because prices were clearly out of line. This was the worst possible time we could go long. Now we're forcing those people out just as affordability is coming back.
Does this situation turn around anytime soon?
Well, as I said, I hope we see the peak in foreclosure sales and that whole process later this year, maybe third quarter this year. Then we can start finding out where the bottom is. But I'll tell you, the other thing that worries me is people are assuming that commercial real estate is okay. That's not the case. There's still an enormous amount of commercial properties out there that either need to be restructured or they extended loans for a couple of years, Mark, and hoping that prices would come back. Pricing really hasn't recovered for commercial. It's stabilized. But what I am concerned about is if the economy remains weak, if unemployment's still weak, then you may see commercial falling further.
Are we, it's a horrible thought, but are we going to see some cities around the country like we see in Detroit, where there's still going to be decades, generations before that starts to rebound? Because a lot of cities have seen, they were in a lot of pain before this, and now the situation is worse. Are we going to see a generation where those cities don't turn around?
Well, I think so. Remember, Detroit is there because of the auto industry. The auto industry was built there because boats used to come down the St. Lawrence Seaway and offload cargo, and they had wagons before they had cars. That's not the case anymore. The whole epicenter of the auto industry has moved to the southeast. So if you think about it, why do we have Detroit? What industries are going to carry that community in the future? That's, to me, the question you have to ask. I've been out in Indiana quite a lot because of my affiliation with Indiana State University. They are on the case. They look at Illinois, they look at all these communities around them, and they understand that they have to find industries that want to make that state their home because of exactly the question you asked. Look at Gary, Indiana. If you hadn't had all those unemployment benefits, those people would have moved. They would have gone to another community where they'd have a chance to get a job. Gary is just like Detroit. There's no nucleus there of business to give that community vitality, provide employment, really underpin the tax base particularly. So that city's going to have to shrink. There's no choice. And Detroit, too, they're bulldozing homes because the banks in that city are actually running away from the properties. They don't even want to take them as a foreclosure.
Chris Whalen, Institutional Risk Analytics, joining us with some very sobering thoughts. Always good to have you on, Chris.
Thank you, Mark.
Indiana State Sycamore. Who knew?
Hoosiers are great people, I must say.
Chris, thanks so much.